Good afternoon, friends outside. Thank you very much, Divya Jyoti Foundation, Register Valuer Organization, for giving this wonderful opportunity in this lockdown edge. Probably few more city 11 towns may be extended. We had to wait and see. So it's a series of CPE hours. Morning, we may be probably having a wonderful session. So now, good afternoon to all respected registered valuers, as well as good friends of mine also. I can able to few friends I can able to see also. So today it's a wonderful day. So we can have the next couple of hours going to discuss on role of a registered valuer in insolvency and bankruptcy code, resolution process as well as liquidation process. So today I'll take the session into more lively. I'll try to do the level best. I'll put into three parts for my discussion. So I know first part I'm talking about what is meant by insolvency bankruptcy code, what is the present role of register valuer in IBC code, and what is the overall scenario pre and post COVID of register valuer. So about briefing about law and some extent because our good senior friends are also there. Respected register values, land and building, plant and machinery, as well as security financial assets. So we'll try to develop in such a way fashion that so everyone could able to understand exactly what we are discussing it. So second part, I'm take it up you in exclusively for IBC related. So what are the areas? Which are the areas exclusively talking about the insolvency bankruptcy code, discussing about this particular registered valuer area and importance of the registered valuer, and what are the legal provisions talking about the registered valuer and related concepts. And the last part, we'll take it very practically, live examples with live example, practical difficulties. Those people already good seniors were already started your professional life of insolvency bankruptcy cases, maybe in the CIP process or in the liquidation process. So what are the practical challenges which we can share? We can take it up, and few things we will discuss it. Apart from that, what is the documentation process, as well as what are the very important things we have to, as a registered valuer, we have to supposed to comply. We'll understand it, and last 15 minutes to 20 minutes, we'll keep it as we'll try our best, the maximum time for question and answers. So it's an interaction between us. We'll look into. So that is the overall agenda for the day. So with this small induction, I can go and start at my presentation. So so by this time, a few more members also join. So 64 people are already participants are there. Fair enough. So we'll start our journey. You know that registered valuer profession is not a new profession for valuation profession is not a new profession in India. Post independence, 70 years plus, we are doing valuation work in different professional entity, like engineers will say true engineers, certified engineers, or chartered accountants are certifying whatnot, land and building, plant and machinery, everything. Everything is certifying and making the things. At nutshell, we don't have any professionalized organization or adjudicating authority. We control the esteemed profession of the valuation. So different statutes require the purpose of valuation, and people will say valuation for valuables in different ways. But over a period of time, the importance of the valuables are transforming into a different channel. So broadly, if you see the valuation, as you know very well, but mergers, acquisitions, and for the purpose of the accounting, like IFRS implementations, and for the purpose of shareholder structuring things, and foreign directors investments, and especially legal related things. In India, legal related things, insolvency, bankruptcy code is a code, income tax, SEBI, FEMA, IBBI, all these registrations, apart from more than the registrations. So for the private purposes, even any investors or family settlements who want to have business entities wants have to understanding about what is the exact value of the organization. Still then the requirement of the valuers are taking and using of the valuers over a period of time. As and gone, things are going well, but why suddenly things are happened? In 2013, in Companies Act, the new word called registered valuer introduced under section 247. And section 247 on 18th October 2017, finally it is notified. Even though 2013 came, the particular section, single chapter is not notified. So until then, the particular provision, wherever more than 1 dozen cases in Companies Act talking about the requirement of the register valuer. So, but it's not, since it's not notified, but acts are not taken into seriously, but provisions are applying who are the register valuer interpreted by the concerned company secretary or the company, that way it's taking place. But today's contest is very, very important. Why this particular section was introduced before pre-introduction, if I say, in 2016, as you know, the Insolvency and Bankruptcy Code was introduced. And when is effectively at the end of the slacks of the year 2016, when the law was taken place, the cases are admitted with the NCLT, Honorable NCLT, and cases are started looking into. So as far as the IBC code, we are going to study that 2 register valuer has to be appointed. So when this registered valuer profession is not regularized, it is not regularized. There is no one educating authority. There is no single set of provisions which how valuation has to be done. No valuation standards existing on the in Indian provisions. So different people, different valuers gives different values, and end of the day that comes for the dispute, and end of the day in the NCLT court case kept for some time a bit. So more than 18% of the statistics says that the cases are kept abreast because of only registered valuation is not properly. There is a extreme difference between one valuation to another valuation. So NCLT court put pressure on the government that is a high time where the valuation profession has to be notified and someone has to take the adjudicating authority and take it up. Then government put the time in 18th October 2017. Along with that, they've taken a call. Time being, they're taken adjudicating at by the time already Insolvency and Bankruptcy Board already having adjudicating authority and controlling authority for the professions of insolvency professionals, supreme authority for the organization, control organization authority. So time being, they're given IBBI to take the charge of 23rd October 2017 as a in charge and adjudicating authority for this profession. So as a result, as you know, we are all registered with IBBI. IBBI still became the adjudicating authority for this wonderful profession of registered valuer. So in the history of the registered valuer profession, IBC courts takes very, very vital role. As a result, what happened once it is notified? So the registered valuers, needless to mention, talking about registered valuer introduced RVOs, valuation standard, code of conduct. So go on, so on. We studied all these things. This is the website. So today my targeted audience, all 3 classes of assets: asset class land and building, asset class plant and machinery, security financial assets. So we'll try to address. So this is the sample of administration of registered valuer organization. Registered valuer organizations as well as RVs, RVEs, and IBBI. So to understand very quickly what is the administrative capacity of the registered valuer. So IBBI is the supreme authority. Under IBBI, RVOs, more than 13 RVOs presently registered. Under each RVO, RV and RVs are registered. I'll put in a single sentence because this you people already know, but still for easy understanding. IBBI is the university. Under the university recognized colleges, all RVOs, and we are the students of RV and RVE, registered with any RVO, including Divya Jyoti, registered valuer organization, and in turn they'll register with the they will communicate with the IBBI. So we can't directly interact with them. So through the colleges, university will be there. Exam will be conducted by them, and we are all qualified. We are the members in as a RVE capacity or RVE capacity. So for better understanding today's statistics, this is very important. People all know that, but still registrations are still going in this COVID period also. Numbers are increasing it. In the case of land and building, till yesterday, official website, 1647, 1647 only. Land and machinery, 331, nowhere. Security, financial asset, still just touch 1100, 1122. put together, we are all registered valuers in India, 3,100 only. Whereas in case of RVE, we are 22 numbers. So if you see the statistics of 31st March, so Divijyoti also already started the countdown. And in case of all three classifiers and 25 numbers, I think still it's more no in between post 31st March to till date. Probably few more members may be added. So these are the total statistics to have an understanding about where we are. Fine. So when initially this law was taking place, we understood that 1st April 2018, they want to take it up, this law to be implemented full-fledged. But due to administrative things, they could not able to have the frame that what is the course of mechanism. And finally, on 31st January, there's nothing but 1st February 2019, that exactly 1 year back, more or less. So this became mandatory as per as the company law. Same way on, so this is the first law. I repeat, this is the first law. Companies Act 2013 is the first act. Recognize the value of a registered valuer. I repeat, Companies Act 2013 is the first corporate law which recognize the value of a registered valuer in India. For what are the compliance have? If you have to comply, only you have to comply through a registered valuer. And today our content topic, Insolvency Bankruptcy Code. Also on 17/10/2018 issued a circular. Through the circular, it made it very clear from 1st February 2019 onwards. If you see, this is 17/10. If you see, this is 25th February. So immediately the IBBI come out and says that, give a circular saying that from 1st February 2019, all resolution process should be appointed by a registered valuer. So the transition period is over, cooling period is over. Now, as and when, as per as the corporate law, Companies Act 2013 is concerned, as well as per as second act, which given a shaken hand for this law is IBC code. So these are the two acts presently we are in, and recognize the value of the valuers, registered valuers, and we are the registered valuer recognized by these two acts only as well. And few sort of things are started in the SEBI also, and go on, so on. It's going to be expanded. As you know, and circular on 16th September 2019, there is a lot of ambiguity between the members that what are the areas has to be covered by under company law, and what are the areas to be covered by IBBI. So on 16th September 2019, very important circular, they're given a set of points, 13 clauses. So you might be known what are the things will cover for me. Those valuables in the land and building, plant and machinery, security, financial asset, have me a cushion. Fair enough, I cleared my examination 1-2 years back, 1.5 years back, but I'm not seeing that still few people are there. Still, I'm not seeing the color of money for as a registered valuer, because I'm not entertained, I'm not taken the job of any assignment in Companies Act or any assignment in IBC code. I may be having my own professional life, like I'm a civil engineer. I have my contract. I have a business work with Wealth Tax Act. I have worked with banks for different proposals, and which I'm still continuing it. But no one have given an opportunity, or I'm not given the opportunity of doing what are the things I will be covered. They will be suppressing it. So to cover these, so IBBI very clearly given these 13 numbers, 13 sections, wherever required, the requirement of the registered valuer. Clearly, they made it in the chart. So point number one, the 13 sections, 13 acts, 13 areas in the Companies Act, wherever transaction be create a security, wherever things are happen, are under section 1774. So definitely before executing the transaction, the company has to be take a valuation certificate only from a registered valuer. Fair enough. So like the same way, they're given annexure 2 and make it very clear what are the areas in the Insolvency Bankruptcy Code, how Companies Act says that, the same way, what are the areas is required to be done, and 7 areas are identified. This is the today's topic, and this is the topic which we are going to have it in detailed manner. So put together, in other words, to have a clarity, I repeat, to have a clarity between our registered valuer profession. Now, any call received from customer, first question you should ask, for what purpose you are doing valuation work. So if any number pertaining to this 13 plus 7, then this is called mandatorily required to be done. So apart from that, whatever we see in earlier starting slide number 1, the slide pertaining about different reasons, on those reasons, if you are taking the assignment, that is may not be statutorily required. Like for example, if you're doing a valuation for the purpose of family settlements, there may not be mandatory requirement. Only if you understand before investor want to do something, they can take it up. So broadly classified valuation professional works into 2 categories. First category, mandatorily required category. Second category, other than mandatory required category. So if you go for mandatory required category, this 13 plus 7, you are covered under section 247, and mandatorily valuation as such today, you have to follow valuation rules 2017. And other cases also, you as a registered valuer capacity, if you are performing anything, definitely you have to comply the provisions of as a registered valuer. So now we have a doubt. What about other things which like FEMA, Income Tax Act, SEBI, or SARFAESI, Benami Act? Different acts are also talking about the requirement of the registered valuer. Then how those people are doing, how that compliance, they're not, why they're not recognizing me? Probably by this time you might be upgrade yourself that yesterday is the last day, before 2 days back it's completed. The draft valuers bill 2020, it's already placed in the 2020, already placed for the public comment. The window also already closed. Our good RBO also conducted a wonderful program. I also observed that. So in draft valuers bill, we come out with the services, made it very clear under section 252 is the draft only. Valuation services mean, so what are the questions I have? Like just few minutes back I given. What are the other services like wealth tax, income tax, SEBI, insurance regulation acts? All these 14 acts are covered, and now we are full-fledged professionals going to be. Once that is the reason valuation profession under the new valuer bill, it's going to be a color coded to be in different ball game, and entire valuation business going to be entire profession going to be a different ball game and different thing. So to answer that question, so this is the answer. We'll hope very soon we'll get the valuation bill in a very decent way after considering all our suggestions and comments or whatever feedback we given to the MCA. Probably government will come out with wonderful bill and which are the welfare of the and to solve all our questions what we raised a few minutes back. So keeping that aside, so keeping that background, now I'll go for this is the background of insolvency profession. We understood these are the 7 cases, 7 instances where the requirement of the registered valuer is required. Fair enough. Now I can straight away go to the Insolvency Bankruptcy Code 2016. So before jumping into 2016 Bankruptcy Insolvency Bankruptcy Code, so let me take few minutes. Because we are a mixer of all people. So those people already having insolvency professionals, and those people are already having a complete knowledge on the IBC code. I request for some time to just hold it and let me take and refresh those people who are studied for examination or those for purpose of the day-to-day life. So let us very quickly refresh ourselves. What is the IBC code? What is the background of the IBC code? So IBC code 28 May 2016 came into picture because unless you understand what is exactly IBC code, then where we are placed in, it's very, very important to take your valuation work in a professional way, because this IBC code valuation is a new ball game. Even though we are the pioneers in the valuation profession last 70 years, but IBC code is a specified code, specified law, specified act. Is a codified and specified laws talking about particular category of the transactions in a particular way of operandi as per as the law. So unless otherwise we understand the basic fundamentals of the law and where we are fitting in is very difficult. So we should understand what is the size of our ring, then only our ring will fit into the finger. So the same way we want to understand what exactly we are in, where we have to fit our knowledge, our experience should fit into the particular law. So we are trying to understand the 5 fingers of the IBC code, then it will be appreciated accordingly. Fair enough. See, in the case of insolvency and bankruptcy code, you might be known about the background of that. I will not detailedly says about what is the consolidated different laws of more than codified different laws and put it to one law, and talking about the insolvency, because earlier related to insolvency and bankruptcy, different acts talking about different way. How we are talking about draft valuer bill, valuer act, valuer act. So tomorrow, wherever you are talking about valuer, you have to refer valuer act. The same way. Earlier in different acts, different things are talking about insolvency related provisions. So whenever you talk insolvency things, it will be referred now IBC code. Now this is the reason it's a codified, it's not act. And it's a town bound one. And it's a maximization of the value of such persons and promote the enterprise. These are the things that are very simple, you can take it up. So object of the IBC code is idea is to resolve, recover, and raise the and economy of the thing. Okay, broadly we'll take what is exactly IBC code in 4-5 minutes. Very simple way understanding it. So it's very important to understand about that. Then we'll take it to the next level. There will be three parties in the for any business. There will be three parties in any business. Let us say two parties, simple. Service provider, service receiver. Service provider, service receiver. And service provider, service receiver is nothing but a corporate debtor. So for example, in any company, so organization structure will be like this. Organization structure will be like this. If you want to do business in any particular business, we require assets. If you want to do business, we require assets. Assets may be fixed assets or working capital assets. I repeat, assets may be fixed assets, working capital assets. So if you want to buy these fixed assets or working capital assets, you require funds. I repeat, if you want to do business, first you require some fixed assets as well as supporting working capital assets to inventory, cash, bank, whatever, advances, whatever. So for this asset, someone has to be help and take it to the asset to be purchased. Who will fund it? The funding party will be bifurcated into two categories. First category is investors, is nothing but shareholders. Second category is funding in terms of a loan, as a loan for a fixed type of return is called the financial creditors. So the owners of the organization, shareholders, we call as a corporate debtors, and we call as a company as a whole as called as a corporate debtor who is administrating it. And second one is we called as a financial creditors who are giving a funding to the company, and for day-to-day operation who are providing the material, other stuff, services, we call as an operational debtor. So three pillars of the organization. One in the IBC, entire IBC ball game. One will be the financial. One is the corporate debtor. That is nothing but a company who was undergoing the insolvency process, who are taking the services of taking the funds and services of the people. Corporate, I repeat, company will be called as a corporate debtor. The person who is funding is called the financial creditor. The person who providing services as well as the goods will called as the financial. For day-to-day activity is called as a operational creditor. So three people will be there. First is the result. So company is an artificial person created by law. Everybody knows. And as far as the everyday transaction, it's not possible for the owners to execute it. On behalf of the owners, shareholders, they will give a representatives, we call as a board of directors. Representatives will call as their board of directors. Board of directors will do the day-to-day affairs of the company. Okay. When things are happening fair between the company and these two service providers or financial support people, fair enough. If whatever returns they're expecting, if you are able to reciprocate it, fair enough. Whenever the financial board of directors, I put this way, whenever the board of directors drastically failed in repaying their loan, their commitment to the financial creditors or operational creditors, rupees 1 lakh and above, then it is called as a default. A default is default, but any amount more than 1 lakh above, they can approach the court for the remedy. Earlier, it go to the court of law. It is taking a lengthy process to make things shorter and make things sweeter. The IBC code was introduced. So, if you want to take any case, under IBC case, three criteria are required. One, there should be a contract between, there is a transaction between corporate debtor and this financial creditor or operational creditor, and there is a default. There is a default in repaying by the corporate debtor to these people, service providers, and there should not be, one is default, two, dispute. There should not be any dispute between these two people. And three, debt financing, and these which are formed part of the financial creditor. So simply speaking, so there should be a transaction between the financial creditors and operational creditors with the corporate company, and which company corporate debtor drastically failed in repaying the money rupees 1 lakh and above, then this have a remedy for this operational creditors and financial creditor approaching NCLT and getting their funds through NCLT, through the IBC code. Okay, fair enough. So once you approach IBC code, and IBC code either in the section 7, 9, 10, 3 sections. Section 7 talking about the financial creditor approaching to the, whenever defaults are happening, approaching the court for getting the remedy. And section 9 talking about the operational creditors approaching to the NCLT for getting the remedy. And section 10 talking about the corporate debtor itself voluntary going and approaching getting the remedy. So this 1 lakh limit after post-COVID, so government, you might be studied, you might see, they are planning to increase, still notification expected to be released, 1 crore, they want to increase the limit from 1 lakh default limit from 1 lakh to 1 crore rupees. So the ambit will be more. So maybe a number of cases taking before the court of law, MCLT, they're going to be a little bit going to reduce in the case of 7 and 9. Okay, so start the process, different days are there, different things are there, different situations are there. So the moment to initiate the process, so either creditors or debtor, financial creditors, operational creditors will initiate the CIRP process. Filing application with the NCLT is the second stage. At the time of application, after putting the, you can recommend the IRP, or on the stage of NCLT will, or if it's not there, and NCLT will appoint the IRP. IRP will be for the period of 30 days. So in this period, he will give a paper advertisement, he will get it then clients, and he will conduct COP and again submit to the NCLT. Then again, the next stage will be, he will either same person, if COC agrees, or different person will appointed as a RP, resolution provisions, and within 7 days, that means within 47 days from the date of initiation of the CLP process, he has to appoint 2 register valuers. Why it is the importance, we'll discuss a little bit later. I'm just completing the process, then we'll go into that. And in this stage, I'll come back this stage a little bit later. So now the stage comes to appointing the resolution professional, RP. RP will be appointed, and RP will be taken. They're supposed to take 2 register valuers within 47 days from the date of insolvency process, CIRP started. The date which is CIRP started is the valuation date, is a significant date. Order date is a significant date for the purpose of all IBC related transactions. Now I'll go one by one so that we can be able to understand. So I give the introduction about that. Now I'll go into the subject of exactly what these 7 cases in the IBC Act, where we are going to fit into. First one. So these 7 cases we can take in such a fashion that first couple of cases pertaining to CIRP process, couple of cases pertaining to liquidation process, and a couple of cases pertaining to fast track, and 1 case pertaining to voluntary liquidation. This is the 7 status, 7 requirements. So one by one we are trying to take it up. First, we understood that case was admitted, and NCLT ordered, CIRP process is started, and IRP is 30 days over, and he collected the liability side, claim side, and asset side. Once this RP is appointed, he will be appointed. He has to appoint the resolution professional within 7 days. So the appointment under, we have 2 things we have to study to understand better. One, law act, IBC code act we have to study, as well as we have to study the regulation related to concerned things. So we require to be studied both act as well as the regulation. Now As per the regulation 27, appointment of register valuer. A register valuer professional shall be within 7 days of his appointment. Resolution professional shall within 7 days of his appointment appoint 2 register valuers to determine, very important, to determine fair value and liquidation value of corporate debtors in accordance with regulation 35. So, provided that the following person shall not be appointed as a register valuer, be careful before taking assignment as a register valuer in the case of IBC code. So, whether you are fitting to any of these 4: 1, relative of the resolution profession; 2, related party of the corporate debtor; 3, auditor of the corporate debtor or any time during 5 years preceding the insolvency commencement date; partner, director of insolvency professional entity of any of resolution profession is a partner of director. So these are the 4 people are barred to appointed as a registered valuer in the CIRP process. So first case, before taking the assignment, make ensure that you are not fit into these 4 categories, and they are talking about appointing related provision. So within 7 days they have to appoint it. 2 people has to be appointed. Who is the 2 people? Now we have 3 classes of assets. The big debate that which class of assets people has to be appointed. 2 registered valuers only mentioned in the law. Now, is it a discretion of the registered insolvency resolution profession to understand, take it up, who has to be either land and building 2 people, or plant and machinery 2 people, or security financial asset 2 people? So this is big confusion. Practically, people are interpreted in such a way for book decent company. To each class of assets people are appointing it, and or else if company is a very small company, practically 2 people, if depend upon the size of the company, depend upon the nature of the transactions of the company, depend upon the nature of the assets they are holding it, the valuers are appointing. If a company having a land based or plant and machinery based, 1 plant and machinery, 1 financial asset, 1 plant and machinery, 1 or 1 land and building. So it like this different combination, this ambiguity also they resolved it in valuation bill. So 2 people has to be appointed. So 2 people will be appointed as a to arrive to determine what? To determine fair value and liquidation value. That means you have to do as a registered valuer, you have to value fair value as well as liquidation value. Generally, what will happen, any assignment for valuation sake, we used to do valuation and we'll give 1 value. Even valuation standard talking about give only 1 value for 1 clear value for the conclusion. But this particular status, particular law required, we have to be given 2 values, fair value and as well as liquidation value. So what then that is talking about appointment. And now very important one, will take some time, more time to understand this law and understand these practical situations, and we'll take it up. So what is fair value and liquidation value discussed about 35, regulation 35. Which having a subclass 1, fair value and liquidation value shall be determined in the following manner. Fair enough? Now we have a confusion that as a valuer I have so far practiced that to give only 1 value. Now you are asking me to give 2 values, one is fair value, 2 liquidation value. Whether I have to give 2 values or I have to give single value, how to do the valuation, have a confusion. So to resolve that confusion, law itself made it very clear. Point number 1, fair value and liquidation value shall be determined in the following manner. They are given the procedure. How to do valuation? A. 2 registered valuers appointed under regulation 27, that is 27, shall be submitted to the resolution professional an estimate. Underline the word estimate. So your valuation work is not certification. Valuation is the art of finding out estimate of a particular asset or liability. So in the law itself, it is made that profession is the estimate of fair value and the liquidation value. So you give an estimate, you have to give 2 value mandatorily. I repeat, I found in initial stages some valuers are giving only 1 value. No, we have to give 2 values. One is the fair value, two liquidation value, two values we have to calculate and give. The estimate has to be calculated and give. How to calculate? That is also made it very clear. Computation in accordance with the internationally accepted valuation standards. Fair enough. Somewhere we studied in valuation rules how to do the valuation. So now Act says that how to do valuation. Valuation should be done as per as internationally accepted valuation standards. Fair enough. In the initial discussion, we started and saying about valuation. Why this valuation profession was emerged? Because in India we don't have a valuation standards, and we require a lot of things. A lot of different people are using different way of valuation approaches and methodologies, and different for different situations, different things are taking up, and there is no single way of taking up and doing the valuation work. As a result, this particular things was valuation books was taken. So since we are the registered valuer, registered under registered valuer rules 2017, what valuation rules talking about? Let's see. As per the valuation rules, rule number 8 talking about conduct of the valuation. Now a little bit I diverted from my regular topic. Now I'll go to the valuation rules 2017 because that is the mother for me who given origin as a registered valuer. That is the mother for me who given the origin for the registration. So what exactly valuation rules talking about? So registered valuer shall mandatorily while conducting a valuation comply with valuation standard as notified, modified under rule number 18. Again, it's forward to rule number 18. What is rule number 18? Rule number 18 talking about valuation standard committee will be formed under different different types of valuation committee people. So these people are already constituted, already developed some set of valuation standards, and already in the last edge of giving submission to the government for the final approval. Still not completed. So they are in the last stage of, and I have an opportunity of few of my friends, RVOs invited to take me suggestion for giving suggestion for this valuation standard committee. We also contributed something indirectly, and my understanding IBS is going to be similar to IBS is going to be one of the valuation standards going to come in India, which predicting it's not final, it is which is emergent because this is a law which is going to become. So still valuation standards are not notified by the central government. So until valuation standards are notified or modified by central government, a valuer shall make valuation as per internationally accepted valuation standards. So here also they are taking about international valuation standards. B, there is no R and. There is no R under. This only, it says that A and B. This mistake, this drafting error was rectified in the draft valuation bill. They put R. So time being, I can interpret it. I can use the interpretation of law. I use as a R. That means in India, until valuation standard committee notified by the central government, a valuer should do the valuation as per as internationally accepted valuation standards or valuation standard adopted by the valuer organization. I think our organization, Divyajyoti organization, is not adopted any RBO standards, or we are not developed. Maybe probably they are in the process of developing their own standards. But in India presently, only Institute of Chartered Accountants of India is the only RBO. They developed some valuation standards and which applicable for the ICAI RBO members, because they made it the ICAI RBO members mandatorily whenever you are doing valuation, and all chartered accountants also, all chartered accountants in India, wherever chartered accountants are performing the valuation work, they have to undergo the valuation as per as the ICAI valuation standards. Okay, that is the information. So now friends, if you want to do valuation now, so you have to do valuation as per as Companies Act or IBC code, because your mother certified organization says that under rule number 80, the valuation should be done as per as the international valuation standard. So you are permissible to do, since the valuation standard adopted by the registered valuer is not there. So in this case, in our organization, we can take generally, invariably, almost all RVOs are understood and taken valuers. IVS, International Valuation Standard Committee, whatever standards they issued, that international IVS standards is the valuation standards generally adopted in India. Fair enough. So here also, even otherwise also, Even otherwise also, we had to, in the case of IBC cases, my interpretation, chartered accountant, a chartered accountant who are doing valuation under IBC also, they should not, even though they have a mandatory thing in Companies Act, but in IBC code, they are clearly mentioned internationally accepted valuation standard. So we understood what valuation has to do. One, we have to do valuation for fair value, liquidation value. Two, we have to do valuation as per the international valuation standard. After physical verification of inventory and fixed assets of the corporate debtor. Friends, some cases in IBC, whenever things are happening, I have a witness and I seen some few friends not even visited in security finance asset, not even visited a unit, and they're giving certificate. But law says in the case of inventory and fixed assets, even fixed assets, earlier for bank purpose, if some case photos somebody get and accommodating things, that type of things will not be happen now. You have to be mandatorily, you have to visit the unit and you have to physically prove that. You have to have a documentation in your working paper file that you physically visited the unit and you taken the information accordingly. Okay, so physically you have to visit it. 3 points you taken it. If in the opinion of resolution provision, now I come to the ones you done the estimation and two values, fair value, liquidation value submitted the resolution provision. Now resolution provision having the two values in hand. Point B, if in the opinion of the resolution provision, two estimates of values are significantly different. If the two values are significantly different, what is significantly different? So 10%, if more than 10% of the value, if you're having a more difference between one valuer and one valuer, so where the problem is started, he appoints another valuer who shall submit an estimate of value computed in the same manner. That means in the same manner, like by applying the international valuation standard, the third valuer also required to be valued. So apart from two valuers, third valuer will also be valued, and in that value, any nearest to these two values will be taken as the average of two closest estimates of value shall be considered as a fair value or liquidation value. Shall be as case may be. So third person also will be appointed, and nearest of these two will be taken as a fair value, liquidation value. Two, after receipt of the resolution plan in accordance with the code of this regulation, the person shall be fair value liquidation. So what is the purpose of that? So that talking about liquidation process may, and third point, very important point, then I'll go for in detail understanding about what is fair value and liquidation value. Resolution professional, and underline the word resolution professional and registered valuer shall maintain confidential of the fair value and liquidation value. This is very, very important, friends. This point frequently we used to get it. Whether our valuation report under IBC can share with our co-valuers, or our valuation report can share with other publicly? No. As per the law, it's very clear, your valuation report should be very confidential. Why confidential? This report you have to submit it to the resolution provision, and resolution provision also kept very confidentially. He has to send to the by email and only for the COC members. So these numbers are very vital for the entire CIRP process. I told you in the CIRP process, there are two things. Now, one asset side, two liability side. The liability side will be assessed by the resolution professional. Asset side, whatever the values you arrived as a liquidation value, as a fair value, the entire process of the liquidation and the resolution process will not be depend upon the value which you given the liquidation value. If you are not properly calculated and if you given less or more amount, it is significantly influence on the entire resolution process the next level. When you're doing a resolution plan or resolution things, the liquidation value is the basis for the entire decision making for the COC. So I request this, we should not be compromised on calculating the especially fair value, liquidation value, well, because it will be the thing pillars where the entire CIRP process will be dependent to. So now after understanding this, let us understand what is exactly regulation says. We already studied it. Fair value and liquidation value. It's a very detailed topic, very difficult topic, and very loosely used. What is fair value, fair market value, realizable value, liquidation value, forcible value. All these things we can see in this thing. But this is a very important topic which we have to be keep in mind. So before going to that, so I recap very quickly. Now we are required to give fair value, liquidation value. Valuation has to be done as per the international valuation standards. So we have international valuation standards. You might be seeing all of us. So you might be seeing international valuation standards. So IBS, international valuation standards. So IBS also they introduced a new version changes by including one particular valuation standard, 31st January 2020. So effectively from 31st January 21st February. So revised. These are the valuation. Earlier we have 11 valuation standards. So these are the valuation standards. Valuation standards can be bifurcated into two categories: general standards and specific asset class standards. There are 5 general standards, and earlier we have a 6 general standards, 3 plus 3, 6 standards. So put together 11. Now by incorporating IBS 2 to 20 non-financial liability, now we have a 1 dozen valuation standards. In this, if you go to the 104 basis of value, you will have all this definition. Wherever time permits, I request, this is the Bible where we have to take it, and wonderfully we have to, each and every one of us strongly recommend to read this. So where we have different types of values. We can see what is fair value, liquidation value, force value, or market value. All these value definitions are prescribed in the 104. Wherever required, I will take into that also into consideration. So now we have to do the valuation as per the international valuation standards. So we should know about what is fair value as per the international valuation standard, as well as what is the law, present law says about. Now, as per the international valuation standards, it's very clearly mentioned that you can see that also you can see. I made this point very clear before moving to the next topic. Under a legal framework, IBS framework, if you take IBS framework, under that departure, a departure is circumstances where specific legislative, regulatory, or other authoritative requirement must be followed that different from the requirement within the IBS. Departures are mandatory, and the valuer must comply with the legislative. Valuer must comply with the legislative, regulatory, and all other authoritative requirement appropriate to the purpose of jurisdiction of the valuation be in the compliance of IBS. So valuer, wherever departures are there, wherever law says about, law prevails the valuation standards. So law prevails the valuation standards. So what law says? The law is very clear-cutly given a definition for fair value. Fair value means the estimate realizable value of assets of corporate debtor if they were to be exchanged on the insolvency commencement date. So insolvency commencement date is nothing but your valuation date. So in your valuation report, you have to give different dates. In that date, one of the very important date is valuation date. Valuation date is should not interpret your inspection date. Valuation date in the case of IBC is concerned, the day which your insolvency bankruptcy code order was taken, that is the date for the valuation date. Between a willing buyer and willing seller in the arm's length transaction after proper marketing and where the parties have acted knowledgeably, prudently, and without compulsion. Okay. So why they require 2 sets of values is the point here. Why the sets of 2 sets of value for the COC? The reason behind is the intention of the IBC code is not for the immediately make the company die and burn. So it's not the intention of the law. The intention of the law is to give an opportunity, to give an injection, to give immunity to the system, to give a chance of putting a resolution into the system. Those are the people who are willing to come into the system and think through the resolution process, bringing the back to the same original condition, giving the corporate debtor hands safely and run the company. This is the intention of the core intention of the IBC code. That is the reason. So there are two concepts are here. One is going concern concept, two liquidation concept. Going concern concept means if it is a company runs as such, if the company runs as such, that is called going concern. Liquidation, if on the day of a particular thing, if the company is going to close, what is going to be happen is called as a liquidation concept. So that is the reason to give two alternative mechanism for the understand the entire process. If your company want to have a going concern way, we have to calculate it. It's called the, if you what is the realizable value, what is the estimated realizable value, is called the fair value. Simple, easy understanding. Maybe technically we have a lot of technical definitions. Lot of definitions are there which we discuss, but easy understanding. If a company having a going concern concept, and if your company could be able to getting the value which as such a realizable value in the fair market value, that is called a fair market value. So what is the fair value and fair market value? Again, fair value, market, both are same, different languages are given. You know, all these things you can see in the 104. You can see what is the definition of fair market value, fair value. All things are clearly defined. So if a company goes on a going concern name, we call it as a fair value. So we'll understand IBS 104 also. Fair value is the estimated amount. Estimated amount. You can see the language. Estimated realizable value. Estimated amount for which asset or liability should be exchanged the valuation date between the willing buyer and willing seller. In answer, same language more or less. We'll be talking about same thing. And even if you go for IFRS, it will be also more or less same language they'll talk. Fair value of the price which received to seller as a paid transfer liability in an ordinary transaction between the market participant and the measurement date. So that's how it will be. Different laws will say different thing. And if you want to interpret the fair value, it is estimated amount expressed in terms of money that may be realizable by expected for a property in exchange between the willing buyer. So that is a simple in the normal ordinary condition with a clear mind. He is aware about what he is selling. He is aware about what he is buying. So both buyer and seller having clarity in their transaction. If an arm's length, if it is not related to any other undue justification, in arm's length, in a clear transaction competitive price, what price you are going to get, that price is going to be called as a fair value. And there is no neither compulsion to buy or sell both. So there is a clear hands of both ends. Then only it will be called as a fair value. That is the basic assumption, and that is the basic basis for the valuing a thing. And in the case of international valuation standard, to estimate the value, so how you have to calculate it, unless otherwise you have to finalize what is the economic objections on that, and from there you have to discount it some depreciation and depreciation related repayment cost. We have different methods. By applying the methods, we have to arrive the value. And the best way of method of using is income approach. There are three approaches: income approach, cost approach, market approach. So this is as far as the IBS. So on other hand, liquidation value. Liquidation, I told you, fair value will be calculated in the case of going concern concept. Liquidation value, when a company as such, you have to visualize. Friends, be careful, observe this point. It's a very tough task. Really, it's a great deal for all valuers. On the commencement of the valuation date, valuer is given a task that we have to visualize in two ways. One way, if company is running and a going concern, and what could be the realizable value, and after giving the expenditure of this, what is the fair value in the after finding of the fair value of the market, after the cost pertaining to the discharge of that, and what is the value returning realizable value, that estimated of the realizable value we have to find out. On other hand, we have to find out we have to visualize on what basis whether company going to liquidate or not liquidated. Is a few early premature statement on the day of CRP process. But as a valuer, you have to estimate. You have to estimate that if company going to be liquidated, then company going to be closed. the going concern concept is not going to be applied. Then what if you're going to be closed on the liquidation, what is the value we are going to be arriving it? And liquidation again, if you go to the 104 forced liquidation, and I'll explain you that, and normal liquidation and forced liquidation. And if corporate debtor were to be liquidated on insolvency commencement date, so on the day of commencement, we have to visualize one hand, if company goes on going concern, what could be the value? On the other hand, if the company is going to be liquidated, what is going to be the value? Both values I have to calculate it, I have to give it. I'm not going to the technicality of how to calculate it, the methods approach, because all experts are, you know that all three type of methods, calculation of that, and I'm not specifying into any category. So liquidation value, if you want to do 104, again, group of assets sold on piecemeal basis without consideration of benefit and associated with the going concern basis. So that means without considering the going concern basis, if the going concern is a very critical point which significantly deciding whether to calculate a fair value or liquidation value. So another set of other bank association, other people are given different ordinary equation. Now in IBS 4, there are two methods I told you, ordinary liquidation to forced sales liquidation. Ordinary liquidation means we have a breathing time when the resolution professional or liquidator having a breathing time for the corporate debtor. Wherever ordinary liquidation based on the value is one that would be realized in liquidation sales given a reasonable period of time. So liquidator or corporate debtor will be given some reasonable period of time to sell that asset, because if you are more demand, your rush up in the market, your value will be come down. Obviously, you would be, when your anxiety is more and to sell that and take the money, then obviously your value will be going to be less. So depend upon, but it is too early to understand what set of which is going to be ordinary liquidation, forced sales liquidation. So it is a challenge where we have to study, we have to sit with the management, corporate debtor, we have to sit with the resolution professional to understand what is the strategy of and COC idea of go ahead and doing a particular transaction, to either it's going to be ordinary liquidation, forced liquidation, or you have to see the financials and you have to see the condition of the corporate debtor. Then depend upon the situation whether your liquidation value to be calculated. That is the first stage of CRP process. So to make it very clear to the audience, to friends, there are two mechanisms of the resolution. One mechanism, if you go for CRP process, it will be like first 30 days. First 30 days will be the IRP. Then RP will be for 180 days plus extend to 90 days, another 90 days, maximum 330 days nowadays. And further, it's going to be happen like this is a normal course of action. Finally, if COC is not accepted the resolution process, then we go for the liquidation by taking the order from the NCLT and going process. That is normal process of taking into this. Then in normally, if you go for a temple also, if it's a temple, we have a normal darshan's line and we have a special darshan line. Same way, insolvency CIP process also, if you have a time, and if you have money and patience and reasons to stay and go for a normal process, and it will go for a normal process. If it is if you're time bound, if you want still furthermore to be this fast track mechanism, because this is a 50% of the normal time. For example, if you give 180 days, here 90 days, and 90 plus 45 days, that's all, the no further extension. And within this will be applicable only for few set of 3 category to satisfy the set of companies only. This fast track mechanism will apply. So we discussed appointment in the normal CRP process, and we understood what is the normal liquidation process time, what is the liquidation we are going to come, and before liquidation we are taking up. There are 2 types of CRP process. 2 types of CRP process. Normal CRP process we see. Now fast track CRP process we are going to see. In the fast track mechanism, more or less the same concept, same number. Instead of 27, it comes 26. We have to appoint the 2 register values within 7 days, and we have to give fair value liquidation. Whatever we discussed a few minutes back, same thing going to be applied now. Fast track, so 2 points, whatever is there, fair value calculation and liquidation value calculation, more or less the same thing. So this instead of normal resolution process, it is going to be a fast track resolution process. That's all. Apart from this, there is no much significant difference in this. So same thing will apply. So we move on to the next stage, liquidation. Liquidation is two types. Like how I said, two types of normal resolution process and fast track resolution process. The same way, liquidation also, normal liquidation to voluntary liquidation. So normal liquidation, once CRP process is failed or COC has come to conclusion that resolution plan will not work out, we have to go for liquidation, then liquidator will be appointed, and liquidator will be appointing under rule number 46. Okay, this is section number 46 talking about. So there are two provisions related to liquidation process. One, for section number 46 and rule number 35. Now we'll give in the liquidation process section number 46 IBC code. Under section number 46, relevant period for avoidable transactions. So point number 2, adjudicating authority may require an independent expert to assess the evidence relating to the value of transaction mentioned in this section. That means in the case of set of few transactions before IBC process started, if adjudicating authority NCLT thinks that if particular transactions are not related to arm's length, is a fraudulent transaction which are not as per as the normal business consultants. So for related parties, before 2 years we can take it up as a basis of the transaction. For other than the related party, 1 year transactions, any particular transaction, adjudicating authority can instruct to the RP to appoint for they will appoint registered valuers to understand the transaction. This is a peculiar transactions. It is not related to CIP process. Friends, normally we studied used to study CRP process or liquidation. Now this is the one section says about 46 subsection 2. These are special cases. These are the special cases. Special assignment will be given to the valuers to do investigation on the particular transaction and understand whether transactions are at arm's length and find out the evidence of the transaction and report and find out the values of the transaction and report back to the transaction to the adjudicating authority. So this is one. And second one, talking about 35. What we see in 35 for the CIP process. Now, after completing the CIP process, after some time, let me 6 months, 1 year, maybe 1 year time, again liquidation once it is started, then liquidator will be appointed and COC, all these people are set up by, and liquidator, then he will take under rule number 35, valuation of assets intended to be sold. Now, liquidation is a process where a big liquidator has the power to sell the assets and take the amount and settle in the flow of the, as per the law which mentioned, water flow of the procedure. So 35 is talking about where valuation has been conducted and regulation 35, insolvency, bankruptcy code resolution. That's what we seen earlier. If already valuation done, if valuation already done in the CRP process, under normal insolvency process or fast track 34, fast track insolvency process, that means two types, category 1 normal channel 35 or fast track 34. Any one of these channels is liquidator shall consider. There is no mandatory that that particular liquidator should take automatically that number. Liquidator have the option. Liquidator shall consider the average of the estimate of value arrived under those provisions for the purpose of valuation under regulation. That means once liquidation process is started, the insolvency professional will take, he may consider the old one, or if he is not consider the old one, he may take into the new one. Friends, in this gesture, I may be give updations on the latest things after post-COVID. Two things, significant things are taken place in the insolvency and bankruptcy code. One, the limit of 1 lakh for making the application for insolvency process, CRP process, enhanced from 1 lakh to 1 crore. You might be known about that, and we also discussed that. Number 2, because of this COVID, a lot of all SMEs and all small cap businesses, all things are stopped. Even for normal businesses or good paymasters also in a position, a deep condition. So by considering this special pandemic situation, government thought the insolvency for new cases, CRP cases, for the next 1 year will be suspended. So what happened to our profession? No profession will not be go anywhere. It will be there. The cases which already initiated. So we may getting more cases instead of CRP process cases. We'll get more cases in the liquidation process, because few cases are already there in the NCLT, and few cases on the process, and few those cases which are come for the liquidation, and our business going to come for the next 1 year. Our core topic going to be liquidation. Our profession of the insolvency bankruptcy code, more than the CRP process, practically our register value or profession may have flourished things in the liquidation process. So let us concentrate on this. So there is an option for the liquidator, and as per as the regulations, if the time gap between CRP valuation report and liquidation valuation report less than 6 months, the liquidator will take the whole report. If from CRP valuation report, liquidation valuation report, the liquidation starting date, if it is more than 6 months, and he will take one more valuation report with the 2 register valuers. Now, interestingly, point number 2, in the case of not covered 1 or where liquidator is of opinion of that means it's the option I already told you. I understand you. Kindly follow, kindly observe it. First case, CRP process, there is no option for the resolution profession. He mandatorily has to obtain 2. Whereas in the case of liquidation, he now has an option. It is an option for him whether to opt it to get whether either less than 6 months. If it is there, he will take the old evaluation report. If it is more than 6 months, he can have an option to take, and he will appoint 2 fresh register. But as far as present situations, no, there is no other doubt. There is no other doubt. The valuation which calculated by our valuers, land and building value or plant and machinery value or any other value calculated pre-COVID at the CRP process, definitely having an impact, definitely having a significant change in the value, in the realization value, because of post-COVID, lot of scenarios changed. So in the post-COVID, whatever the values have changed, so those cases are going for liquidation. 100% definitely all fresh valuation going to be taken. So we have a flourished business for that. All cases which are going to be undergoing for a liquidation process, and shall within 7 days liquidator commencement date. So here valuation date is liquidation commencement date. In the case of CRP cases, CRP date. Appointed 2 valuers. So this is the difference between CRP process and liquidation process. To determine the realizable value of assets or business under A to F of regulation 32. Of course, who are not applicable, all 4 cases more or less same. If you have a personal relation, you should not supposed to be appointed. Then very important point, how will have a value to be calculated? It will be different. You see the language. One more time, I'll take your attention. Liquidation commencement date is nothing but your valuation date. 1, 2 register value appointed. Understood. 3, how to value it? Determine the value, realizable value. Here they're not talking about fair value or liquidation value. Friends, in the CRP process, they're talking about fair value and liquidation value. Now they're talking about realizable value of assets of business under class A to F of regulation 32. What is 32? Let us see 32. Let us understand that, then we'll go for regulation 32, sale of assets. That means liquidator had to sell the assets. Now, what is the mechanism of selling assets? Assets sell an asset on standalone basis. An asset, that means a single asset identified, and sell that one. B, assets in a slump sale. Total assets, there is no bifurcation, sell it on wholesale basis. A set of assets collectively. The assets in slump basis, slump means a group of assets. Slump means without identifying individually value of asset, and as a group we are selling is called slump of sales. A set of assets collectively. Third category, a group of assets grouping it and selling it collectively. Fourth type, assets in parcel. That means pre-packed. Few assets are pre-packed this, few assets are pre-packed this, and pre-packed this. If you want to this, no, we can take 3-4 numbers separately. We have to sell fully. That is parcel of it. And there is a significant change made in last 2018. One new provision was taken, and corporate going C, E, and F. E and F is the new concepts which are included of late. The corporate debtor as a going concern, or the business of the corporate debtor as a going concern. And a few hours back, you only told that going concern means fair value. If it's a liquidation, means liquidation value. Now we already come into the conclusion of the liquidation process. Again, why going concern? So this is the latest development in the IBC code. Even in the stage of IBC, even in the stage of liquidation, even in the stage of liquidation, if particular unit, particular business, particular unit, business, or particular product, particular division are good going, if you could able to sell it in a proper high price, if COC feels that if particular product has to be sold separately, then under 32A, committee of the creditors have recommended sell E and F. What is E and F? If you are going concern concept, so instead of selling all this mechanism, all these modes, you have to sell in this first, in this E concept, going concern concept. E and F, and he shall be endowed first sell under this class. You can't take it the first class, first stand, and you can sell it. You have to take first, try one more time. One more time you would have to, as a liquidator, try it, and there are the instances, there are the latest case studies are there. Even we can do restructuring and liquidation stage also. Restructuring and liquidation stage. Some schemes can be created. We can kept before the resolution professionals, and if you could able to do the restructuring schemes on this stage of liquidation also, you can able to take the company particular division alone, not on the entire company, particular division alone we can give it, and we can take that particular benefit out of that. So the maximization of the benefits out of that, it can be given to the stakeholders. For the purpose of sales under subsection, group of assets are liable to the corporate debtors identified by the committee of creditors. And so while before taking the decision of this liquidation, committee of creditors can maybe taken a decision, a group of assets can be taken, kindly sell this is on the going concern basis. Who are interested to take that one and liquidation, sell that one on the stage. So the resolution liquidator will sell as per as the 32 subsection 2A on that basis. And 3, if it's not done by the committee of creditors, liquidator shall identify some goods and constitutional committee. And in the case of liquidation, there will be a new concept called constitution of committee. One committee, all stakeholders in the COC, more or less based on their weightages. In the constitution of committee, one committee will be formed. In that committee, with approval, liquidator will be. If liquidator unable to sell the corporators, then E to F, then they have to go for within 90 days from the liquidation commencement date. He shall proceed to sell the assets of the company under A to D. That means liquidator has to sell his product in E and F. If he could not able to D, A to D, you might have a question. Why you are telling all these things to me? This is the job of the liquidator. Why you are telling to me? As a registered valuer can have it. Friends, observe it. This is very important. The point number 2. Point number 2 talking about in the case of liquidation, how to do valuation of realizable value. How to do the valuation of realizable value will be depend on assets or business under class A to F. That means what are the decision already once became liquidation, already committee is formed, they may be having one idea and approval is there, which mechanism they are going to dispose of. Because your value will be depend upon case to case. Your value may not be, your realizable value may not be on standalone base different from slum slates. They may be different in assets of the collectibility. If you're doing as a parcel or a package, it will be different. If you're going as a going concept, the value will be more. So it depends upon situation to situation, your value will be drastically different. So as a register valuer, it is absolutely necessary to sit with the management and liquidator to understand which mechanism of liquidation process is going to happen. Once you could able to understand which mechanism this particular mode of operandi is going to happen, your life is became half of your life, it became easy, and your investigation process as per the international valuation standards. Whether now how to value? Is it international valuation standards? Law says something. Point number 3. Register value appointed in subsection 2 independently subject to the liquidator estimated realizable value of assets and business, assets or business as case may be, computed in accordance with the company register value rules after physical verification of assets of the company corporate data. Oh, so now to see the difference between the CIRP process and liquidation process. In CIRP process, we require two values: fair value, liquidation value. In the case of liquidation, we required realizable value. Third sentence, realizable value, fair value. What is the fair value? Realizable value of that one. So here you have to give a introduce one more number, realizable value. That realizable value should be calculated based on the register value rules. Now it's a picture. What register value rule says? Register value rule says as go for international valuation standards. As per the international valuation standards or valuation standards in the particular RVO. Now in the case of liquidation, the problem confusion for the chartered accountants who are members in the ICAI will arise. Because I have an option, either I had to go for international standards. No problem, because international standard, CIRP also they calculated as per the international valuation standards, because still we are not notified, we are taken into that, and no problem. Law also required as per the international valuation standard. Problem solved. But in the case of liquidation, for members in ICAI, if they have an option, then this confusion we have to take a discretion call, and very importantly, seriously, we have to study, understand the law, whether we are following international valuation standards or valuation standard to arrive at the realizable value of a particular asset based on this thing. Okay. So this is very important thing, friends. Okay, I'll complete that. Okay. Fourth point. As usual, average of two estimates received from point number 3 shall be taken as a value of the business. Oh, in the case of CIRP, see the difference, drastic difference between this and that. So the difference between CIRP process may, what happened? So two values will appoint, here also two values will appoint. Two values is mandatory there, that is mandatory. This is recommendatory, or it is a discretion of the people. More than 6 months, mandatory. Difference number 1, difference number 2. Two values are appointed. And how valuation has to be done? Valuation has to be, relatives, all these points are more or less same. And how you have to do, how many values? You have to give fair value liquidation, the CRP process. Here you have to give the realizable value. Point number 3. There you have to give, submit to the resolution professional. Here you have to submit to the liquidator. There you have to follow the international valuation standards. Law made it very clearly. You have to follow international standard, you have to be international standard. There's no other go. Whereas here, law says you have to follow with companies' registered value rules. And there your two values will be submitted. And if two values are extremely different, and third value will be taken, and nearest of these two will be taken. Here there is no concept of third valuer. Two valuers and two estimates received from the category shall be taken as an average. So we have to do average of these two values and find it. These are the significant changes between CRP process and liquidation process, line by line. Hope we detailedly discuss about that. And this is also how mechanism, what is the importance of the 32, because unless otherwise you understand what mode of operandi the liquidator going to be, or taken a call of selling the particular product, then only our entire valuation system will be changing on that. We studied this. Now after that I'll go for voluntary liquidation process. Fair. I told you normal process of the CRP process, then normal liquidation process. or fast track mechanism, liquidation process. Voluntary liquidation is a one special case where corporate person intend to liquidate voluntarily and has not committed any default. This case will applicable only if you don't have default. IBC case means liquidation means liquid. It's not that entirely. Definitely, it may be solvent, insolvency. Those things will be there. All will be considered. If it is a solvent case, it will be if assets are more than the liabilities. In the case of assets more than the liabilities, then we go for the voluntary liquidation. If liabilities are more than the assets, if it is a default in the case, then it will obviously go for the normal insolvency bankruptcy process. And now, if the case where your assets are more than the liability, you are in a solvent position, then you can go for initiate voluntary liquidation process under this chapter. That means voluntary also company can go for a liquidation under IBC code. So in this, apart from that, you have to submit liquidator, you have to appoint a liquidator, you have to prepare the set of documents. Friends, observe very, very important point. 59, subsection 3, point B, point 1. The declaration under part A, you have to give a declaration. This is the declaration given the majority of directors. Shall be, that means the owners of the transactions, the COC or that directors of the company should take voluntary declaration saying that if tomorrow, if completed the voluntary liquidation, tomorrow any other liability arise, we'll take responsibility. That is the declaration. So apart from the declaration, shall accompany with the following documents. That means without this two documentation, insolvency under voluntary liquidation, IBC voluntary liquidation will not be happen. What are the two important documents? One, audited financial statements and records of the operations of the company for the previous 2 years for a period of incorporation, whichever is here. If it is a startup company, small company, if it is less than 2 years, then audited financial statements. Two, a report of valuation of assets of the company if prepared by a registered valuer. That means, so we are equal or we are pari passu with the rank of a chartered accountant. We are equivalent to a audit report. So our valuation report, without this valuation report, or if you are having only audit report without valuation report, voluntary liquidation will not be happen. And if you're having only valuation report, this not be happen. So now law given equal rank for the importance before the court of law, NCLT, that valuation report apart from financial statement certified by auditors. So we are equal, importance will be given. So this valuation report should be calculated as per as the international valuation standard and other stuff as per as the rules which mention the. So 1B report valuation assets of the report, same thing which are repeating it. So this is the one way of taking into. So to cut short, to summarize our discussion under IBC code, yeah, under IBC code we studied, okay, we studied liquidation, we distress asset, initiating the entire process we studied. So we studied voluntary liquidation just few minutes back. Relevant period for avoidable transaction, that is 1 year, 2 years. If you're having a adjudicating authority will appoint and taking up, and recap third one, appointment of registered valuer under normal 2735 is very important. You have to report in your reports. And valuation of asset intent to be sold, that is the 35. What is the way which liquidation process will be taken, and initiation of the liquidation and appointment of registered valuer in the fast track and the liquidation process. So these are the 7 instances where liquidation in the IBC cases, the importance of the liquidator are taken place. Now, this is part 2. We understood the law. Now I'll go for a practical now situation, how to handle this, how easy job it is or difficult job it is, and valuation under IBC. I request all members, last 15 minutes we'll take question and answers. You can keep your questions in the question and answer box. Unlike valuation work, IBC is a peculiar situation. we understood in a difficult stage, in a difficult atmosphere, when corporate debtor, company not in a position to repay even a lakh rupee to the financial creditors or operational creditors, company is in a difficult stage, then only these all IBC cases was this financial creditors, aggressive person who was taken into the default person, who was suffered person will go to the court of for justice. Then court will appoint the resolution professional for taking up to the next level. And that is the situation scenario you can visualize where you are appointed to billing to buyer. You are supposed to appointed to do valuation for to identify fair value and as well as the liquidation value. When company was in a difficult stage, when company was in a great trouble, when we appointed as a valuer to visualize if it is a going concern, what could be the value I had to identify, and if it is going to be close, who is going to the willful buyer, who is going to be a willful buyer, we have to visualize. And it will not be ready-made data which is available in the market for land and building, plant and machinery, security, financial asset, whatever classes may be. For example, take particular land value. I mean, we can't visualize that. First of all, we can't visualize that for particular organization going to go for liquidation. If it goes for liquidation, how long it will going to take, and your value in the case of liquidation going to be taken, but today date, probably down the line 47 days, we have to go back and find out the value of particular value on the day. Go back to the CRP date and finding out your what exactly your value of your particular organization, fair market value of the organization, mean particular value of the land or plant or whatever it may be, and what is could be the selling cost for the sell the particular one. For realizable value, you have to identify it. On other hand, you have to identify the company is closed. What could be the visualized way of value which is going to be the liquidation value. So again, you have to comply the toughest task of go to the insolvency for the international valuation stand. Bunch of act is that, bunch of big definitions are there for the what is fair value, liquidation value, forcible value. All these things are very tough. And what is could be the buyer, what is the market scenario. So nowhere we can able to get it in the ready-madely. All this information should be done only if you do a proper research. So your challenge will start from where I had to go. Who will recognize me as a once somebody registered somebody appointed as like resolution professional call us and appointed as a registered valuer. If I go to the market for see my particular plant, visit my particular land, who is going to cooperating with me? What information in the market they're going to give me? What is the legal entitlement for me showing that you have to introduce yourself in the market? So practically, the real challenge starts from once you taken the assignment. If you go to the market, as per the law, you have made it very clear. Fixed asset has to be physically verified. I have to go physically see the asset. Sometimes it is closed. Entire factory will be closed with full security. Unions will be there, and you can't allow them get inside of the factory gate also. And nearby data, if you are local person, some extent you have an idea about that particular industry, particular market. And in case of outstation people, far away, for other region people, and understanding about the market, understanding about the information, and getting the information from the local comparable numbers, and it's a tough task, which is the starting point. And was another great difficulty in the IBC cases is updation of the books. You might be, books may not be updated, fixed asset register will not be available, and data will not be available. There will be no accountant, and your resolution profession simply says that he will give a 2 years back fixed asset schedule, not even fixed asset register. He will give you only fixed asset schedule and given on the face of us, and from there asset name will be there, land and building. Let us say 25 crores. What is the breakup of the land and building? At least to plan your audit plan, audit schedule, what are the places you have to verify? Plant and machinery, what are the plant? How, when it is purchased? Where is the invoice? No clue, because data is not updated, books are not updated, fixed asset is not updated. But valuer expected to be have a physical verification, valuer is expected to have a inventory verification, and the data to be updated. So how to start, where to start is a big task for the valuers, and where the starting point is valuer has to be approached this thing, and you yourself has to do the research, and you maybe take help of the corporate data and the auditors of the corporate data and book updation and correspondence with the people. This is another big challenge. Coming to financial asset, security financial asset. So land and building, plant and machinery, a few minutes back I spoke. Now the difficulties of a security financial asset person, where in your data, loans and advances and third party verification, investments, and getting balance confirmation from the market, correspondence efforts already made in realization, disputes on the data, third party confirmation, underlying transactions such as outside of the books transactions which are not recognize the revenue. Those are the revenues which are not recognized the revenue. Those are the real challenges which has to be taken into, and all these things one by one we'll discuss if time permits. So these are the real challenges where we have to be, and we have to be addressed. Liquidation value. So how to find out the liquidation value? So another great challenge of this entire liquidation process I told you. So there will be no benchmark for the how to find out. So unless otherwise you sat with the people and find out the people and what level of liquidation mechanism we are going to be applied into, and one by one we have to sit it, and after understanding that, only your application of correct valuation approach and valuation methodology can be applied and it can be done. To cut short, so difficulties in terms of valuation assignment, how to start, unless otherwise if you properly plan to address all these problems, 4 or 5 problems which I identified it. These are practical problems. First, after getting the appointment and executing and concluding and reporting, these are the practical problems. So if you want to do this, all these problems to avoid or minimize, avoid is impractical, impossible, and in most of the cases is we can reduce, minimize only if you could able to do a proper exercise, and if you could able to properly follow the protocols in a systematic way. Let us understand that protocols for the next few minutes, and after that we'll come back for the question answers, and let us see. As you are aware, who is the appointing authority for register value and section 247? Who is the appointing authority? So you might be known that the appointing authority is not the CFO or CEO. Under section 247, law made it very clear, the appointing authority for register value as per as Companies Act, you can see, on such terms and conditions as may be prescribed, and appointed by audit committee or by in absence of board of directors of the company. In the case of Companies Act 2013, 247 made it very clear, the appointing authority for the register valuer is by in company having an audit committee, it will be audit committee. If a company not having the audit committee, it is by the board of directors of particular company. So you should be double care, friends. In the case of whenever you are having 13 clauses of mandatory clauses which you discussed in the early hours, that whenever you have a 13 clauses of requirement mandatory as per the Companies Act, your appointment always should be done by only by audit committee or by board of directors. So any other thing, you will be in trouble. Number 2, in the case of IBC, register valuer will be appointed by, in the case of CIP process, by resolution professional. In the case of liquidation, appointed by the register liquidator. So as we are aware about that, we are had to follow very seriously international valuation standards. And if you seriously follow the international valuation standard 101 talking about international valuation standard on scope of work. This is very, very important, not only for Companies Act related valuations, but also related to IBC related valuations. So entire your exercise will be start only with the appointment letter of a from a proper appointment letter from a registered resolution professional or a liquidator. So in your appointment letter itself, you can have your all your points wonderfully. I have a chance to view it. I don't know how many members are view it your website of Divajyoti web, RBO. So they're given a very wonderful draft appointment letter, which I thought I can bring to the notice of all the members. So they given wonderful appointment format. So don't worry about thing. This is a wonderful appointment. This thing, letter of assignment I use for time being. This as a format for the appointment letter from where you are getting the appointment letter to and subject determination appointment of this thing, and wonderfully as the complying bankruptcy code, by complying 101, the drafting was done very nicely. I have to appreciate the management committee as well as the person who developed this valuation appointment letter, and I had to register the appreciations. So scope of service, purpose of the valuation, intended use, report of conclusions, conflict of interest, confidentiality, payment, valuation, and other conditions, and all these things are made it very clear. Resolution profession address. So everything more or less, all significant points are drafted. Generally, resolution profession over a phone or a thing, he will call and confirm you. And kindly don't take it as a grant. He may be a good friend of you. Please kindly complete the resolution process. Kindly complete. If you want to start your profession, try to work only after getting your appointment letter. This is already available in your website of RBO website and the downloads. So same thing, you can download it and kindly include it. So for developing a scope of work, so your entire exercise will be completed very smooth, cool, calm, only if you could able to get wonderful drafting of your scope of work. This is a one-time job, friends. If you couldn't able to do one-time job and complete in the Word file and give it in your office, at least at junior level, once you appointed, at least your junior level person, properly change the data and send the information. Even though you will get a letter from the RP, whether you're getting or not getting, kindly send as per as the international valuation standard as a part of curriculum. You send to your your resolution professional and get it done and get signed from the thing. So as per as this mandatorily identity of the valuer, who is your valuer, you have to tell it, and identity of the client or other party, who is the party, and intended identity of other intended users. And this is very important, friends. As far as even the law is very clear, but you have to make it very clear who are the intended users of that particular report. It should be to make future any litigation on that. And assets being valued on which class of assets you are doing, and make it very clear. Valuation currency is very, very important whenever you are doing a companies with related to foreign related conversion transactions, very important. And the purpose of the valuation, what purpose IBC code and which section, whether we make it very clearly, which regulation, which section, whether for specific purpose or voluntary liquidation or normal CRP process or fast track, whatever the case, you have to make it very clearly. And valuation date, very importantly, you have to mention the valuation date. In the case of CRP process, the insolvency starting date. In the case of liquidation date, not on the inspection date. Nature and extent of the work of any limitations or any limitations you want to keep it, you make it very clearly. Nature and source of information, all these things, significant assumptions. So once you are clear with this all 13 points, I hope more or less they include it. Any few points which are not included, that also kindly include and make your appointment letter very strong. Your entire process will start once you understand what exactly and capture the data in your scope of work. You will be 50% of have the clarity, then you can proceed your work in a systematic and scientific way. That is the very first important thing which has you kept in mind. So develop your engagement letter very clearly, very significantly. Like I also have what I generally follow. I'll also share that my format of valuation engagement letter. So date, reference for whom I'm addressing it, letter of engagement, so and so, or so and so saying. First, I'll give my professional fees. So I'll open my, this is my letterhead. 1 second. So I opened IBC itself. Why I had to go for normal formatting. So resolution professional, since I'm dealing with IBC, let us take IBC. So this is my format of resolution professional, and purpose, all these things I'll mention, fee I'll mention, and confidentiality. First 2 pages I'll normal standard one. Apart from that, my annexure 1 I'll keep it up. I'll keep identity of the qualified. I'm a registered valuer, so and so, so and so. Identify the client, identify the intent users, assets being valued, other experts involved, currency, INR, purpose of valuation. This is the purpose of section 2235. Valuation date, what date initiated, nature extent of the work used by, as per mutual discussion finalized during the work of valuation, nature and source of the information, where you and all you are going to get the information. If this documentation part, if you could able to methodology, approach methodology also, I'll mention my approach of methodology also. This is what I'm going to do. This is the food I'm going to give it to you. So you tell me if you have any problem after, not on the tape of reporting me. When at the time of engagement itself, I make it very clear. This is the, when I'm talking my your menu, I'm taking very clearly menu. This is what I'm going to give you, with sugar, without sugar. The same way, with oil, without oil, everything you'll make it very clear in the engagement letter, because you will not waste time in the reporting stage. And time frame also, and my fee and other points, confidentiality. Like this, my very detailed engagement I'll made it, and I'll circulate it to him and get it signed by resolution professional and with me, and it will be documented. So if you could able to document this document very nicely, then your process of for planning your valuation assignment will be make easy. So once you are clear about what are the assets you are going to be seen, what are the, you made your assets in the case of land and building. If you could not able to take full list of example, if fixed asset register says land and building, let us say 35 crores, but you could able to see a breakup in the books of accounts only for 24 5 crores, and if further assets we could not able to make it up, and make it up, these are the assets I identified it, these are the assets which I'm going to do it, make it very clear. Once you come out with this paper, then immediately resolution person, no, this is not equal, this is not tallied, you go and get it a full, then you give me, I don't have the data, you give it me. This is the responsibility of the RP to provide the data from the corporation, the corporate data. So in your appointment letter self, make it ensure what you are going to do, what is the scope of that one, number one. Number two, whenever you are giving quotations, fees very, very important. Whenever you are seeing, we have to see 5 figures. Whenever you're getting a decent number, decent audits, you can see 5 figures of your fees. Definitely, you are worth it. You are worth it. You are responsible and you are accountable. You are having that much of value for that valuation report. So don't de-estimate ourselves. The biggest challenge in the market is we ourselves in the market, we degrading ourselves, we degrading or quoting the market code. One insolvency case, one of my friend analyzing he's sharing with me his feeling. So we are getting for land and building one particular case where you're not believing me, that rates are 9,999 and one quote 45,000 something, one quote 85,000 something, one quote 4,50,000 one quote something plus GST. For particular assignment, particular thing, and being a valuers, we have to assess our value, what is our value of what report we are going to give, and we are ranging from 9,000 to even less than 9,000, sometimes also Bata quote like 9,999 to 4,50,000. That means we ourselves not in a position to value our services, what we are providing to the market. So my friends, this is a high time where when new registered valuer bills comes in, the entire ball game is going to be changed. This level of competition, this level of things may not be workable. We have to come out with a different level of protocols, different level of professional services, and different level of codes. And let us have a standardized thing. And through this channel, CPE, I recommend our RVO also have at least between among, as far as IBC is concerned, they're very clear. As far as the fees is concerned, they're not going to interfere into that, and RVO will not interfere. At least they're like chartered accountant profession. We have a minimum scale of fees for this professional work. This is the fees. This is the professional. This is the fees. This is a recommendatory, never mandatory. Minimum fees we have to charge for this. For bank work, what we are charging to the bankers, how bankers are taking extract work from us, every one of us knows. I need not go and comment on that. The same situation should not come for in future for IBC related work or any other professional related work. So it should be very standardized one, whether whoever it may be. Now the profession only a qualified people, unqualified people will be thrown out. Only qualified people will be in the ball game. So if that is the case, we on great difficulty, we cleared the examination and taken the CEP hours, taken COP, all these things, struggles we are doing, and upgrade every day our knowledge. And it's a very high time that we should have a standardized fees mechanism. So please ensure that. And it is recommendatory, any type of recommendatory scale, may not be mandatory. Recommendatory scale of fee structure, if you could able to make it up and circulate to the among the members. Somewhere some people has to take initiation. Somewhere some people has to. So young generation, young blood, young RVOs can take, and even previous RVOs people are not taken. Yeah, at least some RVO, some organization, some city, some group of valuers has to be take a call. So less than this fees, we should not charge it. So take a call on that, and let us have some minimum scale of fee structure, and let us move on and take the profession into the next extreme level to protect ourselves and take into a great level. So in other words, what I'm trying to say, apart from fee, it's very important to have a very clear engagement letter before and properly authorized by the resolution professional as well as liquidator, and get it documented. That is the starting point for your before any complaints. And I'll take few minutes for the reporting, and after that I'll take question and answers. Yeah, reporting is concerned, it will be like this. There is no prescribed format for IBC cases are concerned. Whenever you're reporting IBC, as far as IBC related cases, in the law, there is no prescribed format how registered value has to be report back to the their of completing their job to the resolution professional as well as this thing. But being a registered valuer, as per the valuation rules, we have a fixed format, and we understood that we are following. And one thing, how to do the valuation, law made it very clear that you have to follow the international valuation standards. When you are following international valuation standard, so IBCS 103 talking about reporting. This is very end of the day, what for everything done, appointed, executed, and understood, discussed, summarized, finally reported. If our reporting structure is not good, the efforts which were made earlier in the all series, all things what made earlier from starting from appointment to quality execution, quality time spent, and got the information drafted. But if reporting structure, full data, if you could not able to capture, could not able to communicate it, then entire exercise became failure. So reporting structure may, as per 103, there are specified things are mentioned, which not be, it's not a fixed format, nothing format mentioned in the even 103 also. But few set of information should mandatorily mention as per as the 103. Earlier 7 numbers, now 1 number exceed intended user is added in the new IBS 2020. Last year and February. And scope of work, intended users, Scope of work, what is the scope of work, and introduce approaches adopted. So all these things are already there. And apart from that, you are mandatorily to required to be follow valuation rules also. So we'll go one by one, and I'll try to study and interpret how to draft it. How to draft it is the points. People will say these are the points. So I'm not leaving you, just saying the point and how language can be give for the particular thing. Background information of the asset being valued. So you can say that the asset background will be like as per the IBC code, appointed by this thing. These are the assets under section so and so, under regulation so and so. These are the assets, are the assets which are required to be going to be valued. That is the background. Purpose of valuation and appointing authority. The purpose of valuation will be a purpose of valuation is IBC code, and appointing authority, make it very clear. Appointing authority is resolution professional, make it very clear. And see, identity of the valuer and other experts involved. I, Hemant Kumar, registered valuer and security financial asset under registration number so and so. And if I'm using the expert knowledge, if I'm doing a consolidation of both the land and building and plant and machinery, and both land and building and plant and machinery, we can work out and we can mention, make it very clearly that the other valuers, if I'm using the value of land and building value are so and so, and with the valuation of so and so, I can mention that. That is the point which I have to mention. And apart from the disclosure value or interest. So this is the mandatory thing which have to be mentioned. Hemant as a valuer, and apart from me, my entire team, no one have a direct or indirect interest in the company, because 4 points are which we already seen in this act also. 4 people are not eligible to appoint as a registered valuer directly, indirectly. So I'm not having any conflict or any interest in the company. E, very important, date of appointment. The appointment date has to be mentioned. What day you received it, and valuation date. Valuation date, the date which you are doing valuation. In the case of IBC code, no doubt, undoubtedly, valuation date means not the date of inspection. I'm finding out in few valuation reports, valuation date, inspection date, they put valuation date. No, valuation date is nothing but the day where you have started your insolvency resolution process. And appointment date, it's very important. That is the reason if you have appointment, a letter, then only you can put the appointment letter. So appointment date is very much mandatorily you have to appointment date you have to mention. Inspection date, you have given very clearly the inspection date, investigation undertaking. So as per the law also, you are supposed to go and visit so and so dot physically verify the unit, and these are the assets are identified. Nature and source of information used. I use the source of this patta, putta, gitta, all these things from so and so panchayat, from municipality, from these people. The assets are investigated in this particular website. Particular model was taken into particular website. That particular plant was manufactured by sources from this thing. And I verified the register of companies for charge, any charge on the asset or not. I verified the register of the companies, verified the charge or not. I verified the MCA website. I verified. So these are the source of information. I verified the market. I done a research. I done information from some particular source of forum. There is a genuine information government website. And procedure adopted in carrying out the valuation and valuation standards followed. So what are the system you followed? What is the procedure? What is the approaches you taken into? And what is the approach you taken? And what is the method you taken? There are 3 approaches. Don't confuse with methods and approaches. Approaches are 3. Under each approach, different methods are there. So what approach, what method you are following? Why you are following this method? Why you are not following that method? What is your justification? And valuation standards. Very important, because this is the where we are to be mentioned very clearly. Law also required which valuation standard you are followed. Not only this, every half yearly once we are submitting to the RBO our record. There also we have to mention about valuation standard. Apart from this, new concept due diligence will going to come. Not due diligence, for what is that? Peer review. Sorry, peer review concept going to come very soon. Already IBBI is approved. Peer review concept. All RVOs are circulated to the members. tomorrow when peer review comes, peer review first question will be, what is the valuation standards you followed? Why you not deviated? Why you deviated the standards? So it's very important that you should be well adjusted with what standard, what exact job you have done. And restrictions on user report, very, very important. So we should make it very clear, this report is only for the use of the IBC, assessing for the COC purpose, for the resolution purpose, or any clearly mention that based on this, no investor can be taken into. So make it yourself very clear that this is purpose for only for under this clause only, not this purpose only for this. And a major factor find out that taken into account during the evaluation. Yes, significant conclusions what you have made it. Before concluding, major the factors considered for completing the conclusions. For before coming to conclusion, what are the factors you considered? That and all, make it very clear. And very importantly, you have to mention about periods, limitations, disclaimers, and to the extent what are the other explanations to be taken. All these things you should be kept in your report. So it's very simple in IBC or it's Companies Act. My recommendation, kindly fill all these 12 points in one place, one time exercise, and kindly fill up what are the points related to this, and develop one time and follow the fixed format of thing, so that it will be helpful for you to take it to the next level. Apart from that, you might be studied assumptions, special assumptions. Assumptions, what are the assumptions are existing on the day of particular valuation, and what are the few assumptions which are significantly changed subsequent to the valuation date. So that also should be make it very clearly. These are already having it in the thing. Now I'll go very quickly few questions, practical questions which are raised during our discussion. Now keeping this, if you could able to properly do it, how practically we can practically challenge a valuation, we can take it up. My suggestions, friends, if you take, few people are having a apprehension that there is a high risk involved in taking that IBC valuation works. No doubt, definitely there will be wherever reward is there, risk is there. So definitely compared to your bank assignments or other parallel assignments, IBC will have definitely edge, and we have better financial package in this, and accordingly we have to plan our total thing. And once if you want to take it up the IBC assignments, prospects, and further for post-COVID, few minutes I'll take post-COVID, then I will talk about the challenges. Post-COVID, my foresee of this profession of IBC related to register valuer, except a CIP process for the fresh cases. I repeat, for the fresh cases, for the next year, there is no fresh cases going to be initiated under CRP process. Under rule number section 7 and 9 almost all ruled out. So 10 still open, that clarity has to come. And so profession not much great foresee for this. Apart from that, ceiling limit from 1 lakh to 1 crore also increased. So number of cases are definitely comparatively earlier will come down. That difficulty challenge is there, where you have to be think over that. And coming to second category, which I discussed about liquidation process, no doubt the business will still continue, may not be compared to last year, because new cases will not come, and the existing cases which turn around to liquidation, those cases only going to be having into the liquidation process. So those cases only going to be addressed into having a professional life for us for the downline 1 year until new things going to be happen. So as far as valuation is concerned, practically the importance and as well as precautions which you have to be taken care for the post-COVID significantly more in terms of not one single class, in terms of all classes, because all scenarios, no one is exception to the COVID. All things are changed in the whatever class you take. It may be land and building, plant and machinery, as well as security, financial assets. business models are changed, the risk levels are abnormally increased, and we don't know what exactly, who will pay, who is a paymaster, who is not paymasters, and what is the documentation process, and a lot of legal complaints are dates are extended. So business structuring system is changed. So a lot of changes in the business total thing. Again, to revamp and putting into the same time, it will take few more days, few more years. So until that, we have to be very careful. And especially when you are doing evaluation for liquidation, and you have to be more double cautious that what is the value, liquidation value you're going to be estimated after post-COVID, and what could be the thing we have to be work out into. We should be furthermore cautious in getting the market information, and after getting the market information, and clean up the information of the data, and give a proper discounting, and come out with the proper estimation, finally concluding some values is the real challenge in that. Coming to this, address these points. Obviously, as I discussed, this point we already discussed, that we have to be have the information. We have to, unless otherwise you get into the market and get the data, and study furthermore and bring the data into clean, then only you can able to get that done. Books of accounts, it's the responsibility of the RP with the coordination with the this thing. My request. So practically, what will happen? Few people already handle IBC cases. Since you already know that two values has to be arrived, one valuer already arrived some value. Sometimes resolution professional may already have an indication. He's a coordinator between the two valuers and corporate data. Him already having some indication on that number. He will tell you to the other valuers, sir, the person already done evaluation around some rough number. Kindly you bring your value nearest to that, or bring to that value. That is the real practical situation. In those situations, I suggest kindly don't compromise your professional work. So end of the day, your report, your thing, your responsibility, and definitely know the valuer who is a person who is not going to be taken into charge is responsible for this. And tomorrow something wrong and something happen, and because of to satisfy the resolution professional, kindly don't compromise your work, and don't do the discounting of numbers of whatever way. And generally what will happen, comparing to fair value and liquidation value, so the more or less the language same, and after arriving the fair value, some discounting factor 25%, 20%, 30%, depend upon case to case, people will have a discounting and arrive the number of liquidation value. So those type of applying with the scientific way, if it is a prudentially basis, and if it is really workoutable, really permissible law, then only kindly do it, and kindly don't do just like that, arriving some value, fair value, discounting some 25% and arriving the fair value. Kindly don't do it, and there is a scientific mechanism to arrive that. There should be logics and foundation should be there, documentation paper should be there to arrive the fair value and to arrive the liquidation value. Coming to the financial people, financial security analysis, security people, main or challenge will be getting confirmation from the debtors. In my case, a lot of cases I used to send personally from my email ID as a registered valuer introducing myself, and I'll get a letter from when I send a mail, I have a bad situation. Who are you, man? Who sent to me that all these things, bad language they used to give. So to avoid that, I'll get a letter from resolution profession saying that I am the registered valuer, I am the thing, and this clause will applicable for other people also. Whenever land and building, plant and machinery people approaching the particular location, particular thing where in the entry level itself you will have a problem in entering into the premises, where if you have some letter, this appointment letter, apart from appointment letter, you have an exclusive letter saying that by identifying your name, identifying your face, you are your team member, like identity card sort of thing. If you ask, if you take along with you, even because what will happen, sometimes you may be having to face a problem with you will may not entertain to enter into the gate of the this thing. Sometimes corporate debtor, factory people may not be cooperating with you. those situations you may require the forcibility, go for police, police or some security also. That time this ID as well as your appointment letter will be helpful to you. So especially those type of things of confirmation happens, when I get the letter, I'll attach my appointment letter. This way also I'll send to them, since I introduce myself as a so and so, so and so, I'm the valuer for the organization, and as a part of valuation process, I request to confirm your balances. So if you blanketly send, normally people will not respond for that, and you can mention very clearly by authenticatedly saying that this is the thing, and that particularly I observe that response from the, is not statutory things, but is the technique of getting the thing. And I got a response from the corporate data, and some people say no, yes. After that, getting the list and finding out who are say no and who are confirmed, no problem. Who are not confirmed, those cases taking, again sitting with the RP along with the CD, and discuss about reason for that, and few entries are not paused in the system, and credit notes, debit notes, disputes, GST, TDS, all sort of disputes will be arising it. So wherever possible within our hand, which could able to sort out, and we could able to sort out and finding out the number, and finding out of the number, finding out the realizable cost and fair value, and giving a third party discounting factor, and finally arriving some set of values on that, and we arrive the values. So while coming to the last very important topic, interesting for everyone, is the fees, which already discussed on the topic, but still last sentence which I made it, fee structure. Fee structure, I recommend we can have through IBBI comes, fair enough, may not be possible, but RVOs are at least within the town, within the city. If people come to one understanding that let us have one understanding between us to have policy and understanding about your this thing, and understanding about value of particular fee structure for particular work, particular thing, and minimum pay structure, you should be happy if our friend able to get a decent number of quotations and decent number of things, and no problem, and we'll get in our turn next with decent fees. So, but don't compromise on fees and fee structure, and let us have a wonderful way of thing, and we move into the next level. So I will take few set of questions in the quick box. Those are typed thing, and with that we can take it up. Any questions, specific question related to IBC valuation?
I request you to please put their question in the chat box. Hemanta sir can go through the chat box and start answering. Hemanta sir, can you please close your screen sharing?
Yeah.
Thank you, sir. So there are a few questions already in the chat box. If you can scroll down.
Sir, the notification for increase 1 crore is already coming in March 20, right? So expected notification, I think that to come, sir. Final order has to come, my understanding. Officially announced, no doubt, it's 1 crore only. 1 lakh from 1 crore is already enhanced. Yes, sir. Very detailed explanation. Thank you. Good for efforts. Thank you, sir. More on IBC. Thank you. Sebastian using okay. And amazing, wonderful presentation, Hemant sir. Thank you. What is the majority stocks in the scrap? Yeah, it's a too technical topic, and the fair value. If you start again, it will take another 1 hour, 2 hours. It's a technical topic like related to if international valuation standard. What is the fair value, market value? So those things we can take it into. Okay, if data provided is limited or not fully data, what is the analysis of the valuer? Yeah. So yes, it's a tough question. If data, full data is not provided, that is the reason whenever you are getting information, kindly get it documented. You take a letter from them and saying that with the best of knowledge, whatever the data you're getting from the resolution professional, and apart from CD, some signature part if you take, this is the only data to the best of my knowledge. Instead of you say that it is the best of your knowledge, you are doing it. There's the best of their knowledge, they're providing the information, so that at least you can protect your interest on that. AC or BOD if no AC. Audit committee or BOD if no, fantastic. So the question is under section 247. Gentleman sir is asking from Vinay Ramchandar. Vinay Ramchandar sir is asking about if a company having audit committee or board of directors, if no audit committee. So the point is under section 247 says about if a company, all companies do not require to have a audit committees. Well, some decent company which are required to comply the particular provision required the audit committee. Those companies having required audit committees, those companies having audit committees required to be complied through a audit committee, recommendation audit committee. If a company not having audit committee, then it is done by the board of directors, not by the, underline the point, don't take by phone calls like bank calls or something else, or your CFO or CEO or operational head, someone gives authorization to go ahead and do it. Like that, kindly don't do it. Take either in the case of Companies Act, take from board of directors or audit committee appointment only, or any person who authorized by the board of directors can take it into at least and worst situation. And in the case of IBC cases, no other doubt, you have to get it from resolution professional as well as liquidation cases, liquidation. Okay, liquidator value, so that point should be value liquidity. If you are, if there is a delay in providing data by corporate debtor, is the delay considered? Yes, of course. So it's a time bound. Totally IBC is, as far as IBC is concerned, is a time bound. So even every day is counted. So if any delay from date of receipt, that is the reason in few minutes back, so I'm telling, whenever you are sending a communication to the corporate debtor or through resolution provision, date of asking information, you make it very clearly in your mail or physical copy for handing good, date and signing. Whenever you are getting your follow-up calls or follow-up your mails, make your data very clearly, and that when you're getting any physical documents by hand with a covering note, by kindly develop the practice of putting a covering note and take when you're handing over the particular note and understanding, you can understand the difference of when you ask the particular document and when particular document they provided to, it will be clear evidence of that. At least from your side, yes, definitely in the court of law, question will become, but if you have a substantiation that I'm consistently following and delay is not from the end of the valuer, it's a delay in the front of, even I have a case of 4 months I done one particular IBC case. So, but it's clearly documented saying that these are the things, reasons where the cases were information not provided. Okay, can previous report by register valuer is a part of a document you referred and replied upon? Previous report by register valuer, part of documents you referred and replied upon. I could not even understand. Harish Singhi, are you having a presentation? Yes, I'll share you, sir. Don't worry. Wonderful, thank you. Presentation is good, thank you. Whether professional fees, professional fee, very good, of valuer in the valuer bill, including travel expenditure or convenience is separate. No, as far as the draft valuer bill is concerned, my understanding, it will be decided by driven by the market, and whatever additional costs out of pocket expenses is the give and take. It will not be fixed. It absolutely is a contract between you and party. What is realizable value in single sentence? Fair value minus what exactly going to come into your pocket is realizable. That is what cost you are going to spend for selling that particular product. That cost, if you reduce, you will get the realizable value. How to fix, how to value fixed asset where enforceable director owned by respective assets already seized by ED, and access to such asset verification is also not granted by authority of the valuer. So you have to approach through RP only. There are some situations where assets already seized by enforcing authority, and there are situations where you could not able to even enter in the gate of the particular thing. So those cases, yes, that is the reason I told in my discussion, if you have a letter or some sort of thing authenticating, even our RVUs are started giving identity card sort of things should be given. so that in the presence we should have an identity card saying that I'm a registered valuer. When in the new bill you say that we are going to be used, so we are going to be esteemed people, so we'll have some sort of identity apart from our visiting cards. Very good information, good information, good information. PPT I'll share you, sir, don't worry. If it is during lockdown period, we'll video inspected valid. We will video inspection valid. What is it? If it is during lockdown period, will video inspection. Video inspection, how it possible? I don't know. Unless otherwise you physically visit the particular location, unless otherwise a particular product may not require to physically verify, may be possible. But as far as land and building, plant and machinery, you're supposed to have physically verify. Then only you will have diameters and the parameters. Technical knowledge, I'm not going to that. So you might be having it. There's two technical questions. One question is through video I can able to see that that particular land and building, and I'll assess and I'll take it up. So it's a two technical thing. But if you could able to your moralities, I mean valuation standards as well as your norms allows that, it will be taken into. Today total session is good, valuable, good. Okay, nice explained. Thank you, sir. Please complete almost all time. Question and answers, yes. Factors, any factory value correction. Yeah, do we use any factor in value for correct due to COVID? Yes, COVID is a significant pandemic where is definitely whenever all three classes of us, whenever we have to do concern asset, when you're doing a discounting factor or when you are doing allowing a market value, definitely you have to understand the impact and value, how it's going to be violate, and discounting factor accordingly we have to give. PPT will be given. Please confirm attendance. Okay. How to value fixed assets which are sealed with, okay, that is over. And how long different in visit date and report? Fantastic question. Fantastic, good question from Saurabh Ji. So how long difference in visit date and report date is allowed? Like we visit a property before lockdown, which is almost 65 days. Report is not yet submitted due to COVID. Do we need to visit? Sir, this depend upon see your valuation. In the case of IBC is concerned, as far as IBC is concerned, and liquidation is concerned, you are going to give on the valuation date. Valuation date will be your commencement date. Unless otherwise it significantly impact any value which come down on, or anything more than, see, your value will be going to arrive on the day of CIRP process, maybe 70 days before. So that value we are arriving it. Okay, while arriving that value for liquidation value, if on the day of report, if you feel that any significant influence will be taken, it is going to be reduce the cost, definitely you have to give impact. There's no second doubt. And if required to revisit again, because due to perishable goods or perishable items which are required to be revalued, definitely you have to be look into and you have to calculate, and value has to be accordingly, we have to report it. Can you hold report by another valuer bona fide document to be referred? No, I don't think so. A whole report cannot be taken as a basis. And first of all, that whole report he is not supposed to share with you. So as far as the valuation is concerned, it should be already discussed. The IBC valuation should be confidential. It should be kept with you only, and it should be after you can give it to the only you have to submit to the resolution profession or liquidator. How you can give publicly to the another friend? Since your friend is asking a format, you are sharing your format. That means you're violating your code of conduct. Will be violating. So you are not quoting, apart from quoting the number, the person who helped you and giving that report also suffered. That's what my view. Kindly count, do it, and you are not supposed to take use of the report of referring the other people's report. And good session. Please take 2 questions. Okay, sir. I'll restrict my difference. The value of two valuers is permissible 10%. My understanding, the difference between the two valuers having a difference more than 10%. My understanding 10%. Then it will go for the third valuer, not 15%. More or less, it's things through. Any specific questions? Or thank you very much, Divyajyoti, RBO, for giving this wonderful opportunity.
Thank you, sir. for this detailed explanation. Like, I sincerely thank you on behalf of my team. And thank you all the professional delegates from different RVOs for being part of this session.